Welcome to the Riskwiser Zone, the podcast where we dive into the latest news and trends in the world of finance and investing. I'm your host, Louis, and I'm excited to share today's stories with you. We're starting off with a look at two different yet interconnected stories that highlight the current state of global economics and consumer behavior. On one hand, we have the issue of declining tourism and retail sales in certain parts of the world, which is being attributed to factors like trade tensions and shifting consumer preferences. According to recent reports, international tourist arrivals have slowed down significantly, affecting local economies that rely heavily on tourism. On the other hand, we're also seeing a slowdown in new home sales in major regions, such as the Greater Toronto area. The latest numbers indicate that sales have hit near historic lows, with inventory levels reaching an all-time high. This raises concerns about the health of the housing market and its potential impact on the broader economy. It's essential to consider these stories within the context of global economic trends. The decline in tourism and retail sales can be seen as a reflection of consumer uncertainty and changing spending habits. Similarly, the slowdown in new home sales may be indicative of affordability issues, rising costs, and regulatory challenges faced by the construction industry. As we navigate these complex issues, it's crucial to remain informed and adapt to the evolving landscape. Whether you're an investor, a business owner, or simply someone looking to make sense of the economic world around you, understanding these trends is vital for making informed decisions. We'll be exploring these topics in more depth throughout the show, discussing potential implications and strategies for mitigating risks. So, stay tuned for insightful analysis and expert opinions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, where we're navigating the twists and turns of the global market landscape. I'm your host, Louis, and we're in the midst of an exciting episode filled with updates from around the world. As we dive into our middle segment, we have not one but two compelling stories to share with you. First, let's take a look at the UK stock market, where the FTSE 100 is poised for a fresh record on trade optimism. According to Bloomberg, the UK stocks are set to break new ground, driven by positive sentiment surrounding trade negotiations. Now, let's break down some of the key events that are expected to shape the market today. We have a slew of earnings reports from major players like Lloyds, Reckitt, BT, Vodafone, Centrica, and RELX. These companies will be under the microscope as investors look for insights into their performance and future prospects. For instance, Lloyd's exposure to the motor finance probe will be closely watched, while Reckitt's sales growth is expected to be driven by its core brands. BT's results are seen showing intense competition in the Openreach broadband division, but cost cuts may help boost the bottom line. Vodafone's merger with Three and its German business performance will also be under scrutiny. Meanwhile, Centrica's cautious guidance and share buybacks will be closely watched, along with any updates on its investment in the Sizewell C nuclear project. And RELX is expected to deliver solid growth thanks to its growing use of generative AI in improving its products. But that's not all. We also have some exciting news from the world of politics. Indian Prime Minister Narendra Modi is in the UK to sign a landmark free trade deal with his counterpart, Keir Starmer. This agreement has been nearly 3 years in the making and is expected to boost bilateral trade by an additional £25 sterling 50 pence billion a year by 2040. The deal will cut tariffs on goods and increase market access for both countries, making it easier for UK firms to export products like whiskey, cars, and clothing to India. Indian manufacturers will also gain access to the UK market for electric and hybrid vehicles. As Prime Minister Starmer noted, this landmark deal is a major win for Britain, creating thousands of jobs across the UK and driving growth. And as Modi said, it's an ambitious and mutually beneficial agreement that will catalyze trade, investment, growth, job creation, and innovation in both economies. So, what does this mean for investors? Well, with the UK and India poised to strengthen their economic ties, there may be opportunities for growth in various sectors. But as always, it's essential to approach these developments with a critical eye and consider the potential risks and challenges that lie ahead. Stay tuned for our final story of the day, right here on the Riskwiser Zone, where we'll explore more market insights and analysis to help you navigate the ever-changing landscape of global finance. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a thought-provoking story from Moran Capital Management, a value-driven investment manager with a focus on small-cap stocks and special situations. As we dive into this story, it's essential to acknowledge that investing in the stock market always involves risk. The team at Moran Capital has shared their insights and strategies, highlighting the potential benefits of concentrated long-term investments in inefficient corners of the market. Their approach is centered around identifying undervalued small-cap stocks and special situations, which can be more susceptible to market fluctuation. However, as we've seen from their performance metrics, this strategy has yielded impressive results, with gross returns of H1 16.8% and net returns ranging from A 12.7% to EA 14.3% since the fund's launch. It's crucial to note that past performance is not a guarantee of future success, and investors should always conduct thorough research before making any investment decisions. The top 5 positions held by Moran Capital as of June 30, 2025, include Claris Corp, Correios de Portugal S.A., Horizon Kinetics Holding Corporation, Turning Point Brands, and an undisclosed position. As we analyze this information, it's essential to consider the potential risks associated with these investments. The fund's concentrated portfolio and focus on small-cap stocks may increase its vulnerability to market volatility. Furthermore, the fees and expenses associated with the fund can eat into investors' return. In conclusion, the story from Moran Capital Management serves as a reminder that investing in the stock market requires a deep understanding of the risks and rewards involved. While their strategy has yielded impressive results, it's essential for investors to approach any investment opportunity with caution and carefully consider their own risk tolerance and financial goals. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.